Alright, so welcome back to the inside of my screen. So the first pair here we have is the dollar card. Alright, trader, welcome back to the inside of my screen. So the first pair we have here is the dollar card, USD card, and if you've been with me for a while, alright, trader, so welcome back to the inside of my screen. The first pair we have here is the dollar card, and if you've been with me for a while, you would have seen that I've been calling this pair to the downside. However, for some reason we got here and then we failed to actually. Alright, traders, welcome back to the inside of my screen. So the first way we have here is the dollar card, as you can see. So if you've been with me for a while, you may have seen me call the USD card to the downside. However, for some reason, yeah, it just got here and then failed to continue lower. So in this case here, what this simply means is the market is starting to point to the upside because we've actually broken above the blue bar. Alright, and you guys know that whenever this market breaks below or above a blue bar, it tends to rally or dip to the next blue bar. So the market moves from one key level to the next key level, as I always say on this channel. Yeah, so now what do we have here now? Well, for this to happen here, this is literally a weekly engulfing candle here. This is the weekly time frame, by the way. You guys know I do something called chart hierarchy strategy, where I like to go from the monthly time frame down to the daily and even the 4-hour time frame. I work my way down because I like to have the best eye perspective. So as you can see here, every single thing looks poised for some bullish momentum to the upside, because now as you can see here, this is a weekly engulfing candle, engulfed 1 2 3 4 1 2 3 4 5 6 7 8. So 2 months of trading action engulfed with one single week. This is huge. And then it didn't only engulf, but it also broke above the blue bar, hence starting to point to the upside potential reversal. So what this means for us is that in the nearest future we should be seeing the dollar card rally all the way to the upside. Now scaling down to the daily time frame. Now, by the way, there is an ascending trend line here that was actually respected. If you come on here and plot this guy nicely, you can see that if you extend it like so, market did actually come and break below here, and then it failed to sustain below and then folded all the way back up. And now you know that whatever and you guys know that whatever the dollar index tends to do is what the dollar card also tries to do. So as you can see, this is starting to point to the upside. So we have already put in. So this was a failed chart pattern here. This was supposed to be a head and shoulders pattern. However, it didn't really hold. Instead, the market came and gave us a triple bottom here and then reversed to the upside. And now what we are noticing here is a potential demand level creation, because the market this was a false back after the breakout here. So this was more or less a triple bottom. So this was more or less a triple bottom, and then this is the demand level created here, and the market is definitely going to rally and then come back and then test that nicely. That is the only thing we are waiting for. So what we need to see is continuous rally to the upside, the pullback into the already created demand level somewhere around 1.39100 like so. So once we see a decent bounce off there, we can now continue to take this guy to the upside. So this is exactly what I'm waiting for on the dollar card. And you guys know that whenever this happens, or if this plays out nicely, you will definitely see the dollar the XSS USD pairs collapse. I'm talking about the pound sterling, the euro dollar, and then the rest will just collapse to the downside. Yeah. Then also one other thing that you need to take into consideration is the fact that we are still trading inside of a downward Fibonacci play. So anything could pretty much happen at this point. That's why I'm not very eager to hop on any trade. I'm quite patient. Those of you guys know me personally, I can't wait for an entire month to have the best quality trade set up. So what I simply need to see is the market needs to come up here, break above this Fibonacci 0.618, so that any probability of this being a false break is actually out of the window. So I need to see the guy rally a bit, then come back and test this blue bar nicely, then balance out, then give me a very decent entry like a 4-hour bounce or a Fibonacci play or even a counter trend line break. Once I see those criteria met, I will definitely hop on. Once I see those conditions met, I'll definitely hop on here. I'm gonna be here to let you guys know exactly how to capitalize on this entire trade setup. Alright, so that's that for the USD card. So let's see how it looks on the 4-hour time frame. You guys know I really love to do business on the 4-hour time frame. So on the 4-hour time frame, exactly how things look. So you need to see that this was the first demand level created. Allow the market go, let it rally, then on its way back down, that will actually make our trades. All right, so that's just that about that. So all things being equal, yeah, provided that the dollar index continues to gain strength, we should see this guy rallying to at least 1.41165 and then give us a decent pullback for us to actually go long. All right, so that's just that for the USD card. So by the way, before I continue, guys, I urge you to go ahead and subscribe to the channel and turn on the bell icon, so that whenever I come again and drop a very juicy video, you'll be among the very first few to actually capitalize on these moves. All right, so the next point here we have is the DXY himself. So DXY has been the actual guy causing the rockers in the markets. Anything that the XY does pretty much determines what the rest of the foreign exchange market, pairs will do. So right now we're actually stuck in a sideways movement. The market actually came and then balanced out at a third touch of a trend line, which could most likely send this market to the upside. Yeah, you guys know the third touch of the trend line always does a trick in this market. So we have the first. Let me just go to the monthly time frame, so everything's pretty much clear for you to see. So this is a monthly time frame, like so. First touch here was very decent. First touch, second touch, third touch here, and then scroll down to the weekly time frame. You're gonna see how we look. So the market simply sat on a very crucial level. Anything that happens around this level pretty much determines what will happen across the foreign exchange market. And as it stands, the market has failed to hold below here. Instead, this is what happened. We followed all the way back up, and now we've tested these guys nicely, and we've broken back into the trend line. So this is how it looks on a daily time frame. So with this in mind, I will not be surprised to see the DXY rally into this blue bar here at 99 or maybe even 100 price points. All right, so once we see that, we will most likely be testing and playing around this level again, and then whatever happens after here will now determine what we'll do. But for now, I am bullish on the dollar to the tune of 60%, and then bearish to the tune of 40%, because provided I will actually remain above this level here, there's every tendency that we're going to ride into the blue bar here, which is without any doubt the most significant level in this market here. So that's just that about the XY. So it's a very simple thing here. Already we do have a breakout retest and then continuation to the upside. So this will most likely continue to the upside, and then we will now see a potential reversal on the dollar index, provided that this level remains intact. Okay, so now what this means for the rest of the pairs is, if this guy continues higher, USD card will continue higher, and the dollar Swiss franc will continue higher, and then the pound sterling, the euro dollar will actually collapse. Yeah, so that is what it means around this guy. So now let's move on to the next pair. So the next pair right now would be well, the pound sterling is still in the range. I'm not really, it's still moving sideways. Yeah, it hasn't really decided what direction, because the DXY is also stuck at one level. Yeah, so nothing really happening across the pairs at the moment. So let's talk about every other pair that has potential. This is being the S&P 500. Yes, so you guys know I call that S&P right from this point here to 6,700 basis points, and we not only hit 6,700, we actually exceeded 6,700 basis points, and we're actually en route to 7,000 basis points, which is my next level target for the S&P 500. You need to understand that the stock market has a bullish sentiment here. People are always buying stock. People have a very bullish sentiment and outlook on the stock market, so best believe it will always rally. If you ever see a downward trend on the S&P, it's just a pullback here. So now this is how things look. We've actually broken above here. We've created, you know what I always say to you guys here, the market must create a demand level, then come back and validate it, then give you the third touch, the third pullback. So this is what's happening here. First touch has been done, second touch here validated, and then this is the third touch we're actually waiting for. So all things being equal, I should be seeing the S&P pullback into 6,000 570 basis points. Once I see a very beautiful pullback inside here, you see the exact same way market reverse here that gave us this bullish and going for our candle. That's exactly what we need to see here. So once we get that condition met, I'll be here again to let you guys know, which is why I urge you to go ahead and subscribe to the channel and turn on the bell icon right now that you can, so that whenever these things are ready, you'll be amongst the very first few to see and then capitalize on these trades here. So it's a very simple procedure. Tap on this guy and I'll rally to the upside. It's very simple. Okay, so I think that's just that about that. So now you need to understand that whatever the S&P does, the Nasdaq and the US 30 also follow suit. So if the S&P is bullish, best believe US 30 and Nasdaq will definitely continue in the bullish trajectory. Okay, so let's see what the Nasdaq also has to offer. Again, we have similar kinds of demand levels created on this guy. So again, the Nasdaq here has to pull back into 23,890 basis points. Once you see a decent pullback in here, I have no iota that this guy is rallying all the way to 27 or 30,000 basis points for the Nasdaq. You need to also understand that the market is just coming off of a very solid demand level here. The market held nicely and then went on to rally, and you guys know that after every impulsive move comes a correction. So this, as we have from here to here, is an impulsive drive. So what we need to see is a pullback into 23,000 23,900 basis point. Like, so once you see that dip nicely and we have a very decent balance, the Nasdaq would definitely continue to the upside. And if you're the type that likes to buy and hold, is your opportunity. If you're the type that likes to day trade, I mean, I'm here for you, man. Every single thing you need is here on this channel. Do yourself a favor and click on the subscribe button and then turn on the bell icon as you do so. Yeah. So I think that is that about that. Let me look at any other pair. So we have crude oil. So crude oil is starting to show signs of bearishness. You guys know last time I was here, I told you guys that I was bearish crude oil. I'm actually still bearish on crude oil, and I believe that all things being equal, that crude oil should be dipping into $55 a barrel. And I hope that you guys are ready to make money off of this, collapse with me. Um, I'm never ever shy of coming on here to let you guys know what my current perspective on crude oil is. I actually love to trade crude oil a lot. So as you can see here, I called out crude oil from this point here, and we've actually gone ahead. We didn't only smash my TP, we blew through my TP. All right, at $61 a barrel, and I think stand we are actually poised to drop further, even into $55 a barrel. So this is how things look. We have a very clear break, below here, following this daily engulfing candle. The market just continued dipping lower, and I believe that this was a weekly bearish engulfing. All right, so as you can see, things are lining up perfectly for further meltdown. Yep, so this was a bearish engulfing candle here. This is huge on weekly time frame. So best believe this would most likely paint the narrative for the entire crude oil movement, because you need to understand that the higher time frame always paints the narrative here. The higher time frame always lets us know what the market most likely do long term. And I'm a swing trader, and I urge you guys to also switch to swing trading if you're not already there. So this is the best and most profitable and sustainable way of trading. So I need to see the market come and correct. So whenever you have an impulsive move like this, market comes into half of the length of this entire impulsive move. So expect further pullbacks on crude oil into maybe $62 a barrel. Once that is done here, we should see this guy rotate all the way back down to the downside. Yes, I believe that's just that about that. Let's just check what it looks like on the 4-hour time frame. So 4-hour time frame is given this. So what this simply means is that I expect this guy to come on here, and then also one of the ways to know the midpoint of a pullback, that is to say where the market ought to pull back into, is by the use of Fibonacci. If you're able to connect the TP points here all the way to the bottom, it will let you know most likely where the market to pull back into, or the ideal midpoint of the entire stretch. So this brings us into the 63.50 region, like I said earlier. So once you see that descent bounce off of there, it will definitely be locking this guy short all the way down to $55 a barrel. So we have a lot of peak to the downside. So but what we always need to see is a pullback. Once you see a pullback in there, that's fine. Or in the event that the market wants to hold on this other supply level here, what you simply need to do is allow this market go, because this is the first pullback, second pullback. Allow it go. Now on his way back up on the third pullback, this is where we actually want to execute this guy. All right, so it would most likely look like something like this, from a swing high all the way to swing low, like so. Allow it drop nicely to this point, then pullbacks to $62 a barrel will actually go short on this guy. In any case, I'm bearish on the crude oil, and I hope you guys also see my own perspective. If you have any comments or any suggestions, let me know what you think in the comment section. Yeah. I think I pretty much covered every significant pair at this point. USD MXN has nothing to show right now. USD JPY, I'm bullish on USD JPY, I'm bullish on USD CAD. All these pairs here are actually going to the upside. Okay, so do not panic, do not be worried about anything. All you simply need to do is subscribe to the channel. So alright, so do not panic, do not stress yourself, just subscribe to the channel and turn on the bell icon, so that whenever these markets are ready, I'll be here to let you guys know exactly how to capitalize on them. Okay, so a quick overview. Alright, so a quick review. So USD CAD to the upside, the pound dollar to the downside, euro dollar to the downside. Alright, S&P to the upside, Nasdaq to the upside, crude oil to the downside. Those are the pairs I'm actually looking at the moment. So be sure to always come back and watch this video over and over again till you get the concept, to get me. Alright, so that's just that about that. I believe I've covered every single pair of your choice and my choice, and the one that has the most realistic chance of getting us money this quarter. All right, so that's just that about that. Let's go.